You're listening to the We Are Libertarians podcast network. Find all of our shows at wearelibertarians.com. Welcome to the Chris Spangle Show. Thank you so much for being here. Ooh, the music is a little loud. Sorry about that. Thank you for joining us here on the program. Today we're going to talk about something that I've wanted to talk about for a couple months. Don't know a ton about, but it started popping up everywhere, and I keep seeing the letters ESG. What the heck is that? And all my conspiratorial-minded friends talk about BlackRock. Well, what's that? And so we're going to talk a little bit about that today because it's not a conspiracy, and there's some real trade-offs with ESG and in their investments. So helping us sort all that out is Mike Viola. He is the head of analytics at the Foundation for Economic Education. He previously spent 5 years in investment research, helping create one of the first databases of ESG and values-based investments, and is a Young Voices contributor. And he wrote an article in thecentersquare.com, Republicans should follow Florida's lead on ESG investing. So, Mike, thank you so much for joining me here on the program.
Yeah, thanks a lot for having me, Chris.
All right, explain to me what ESG means.
Sure. So ESG stands for environmental, social, and governance. It is a mode of investing that was originally started in the 90s, but is getting more popular in recent years, that basically uses those three criteria as additional risk factors when assessing whether or not to invest in something. So if you were to look at, let's just take a random stock, Microsoft, people who are adding ESG considerations to their portfolio would also consider, say, poor environmental relations. Maybe they're dumping a product improperly as, say, a risk factor when choosing to invest in it.
Yeah, and so I think I get the environmental part, and really, I don't want to pick on progressives, but is some of this subjective? Like, you may look at a company that really values DEI initiatives, diversity, equity, inclusion initiatives, which improves their ESG score, or a company that is carbon neutral, which increases their ESG score. That can be good, right? Like, I'm not necessarily saying that it's good or bad. I'm just trying to understand more about it. Like, when you wrote your article about states divesting, like, do you have a negative view of ESG ratings?
I do, because I don't really think they're serving the intended purpose, right? As I said, they were intended as a risk measure, but you made the good point that they sound extremely subjective. And I would certainly put that DEI world, which oftentimes is a part of those social S screens, I would put that whole DEI world as something very subjective. It also doesn't make a whole lot of sense. I mean, I would think governance would normally, affect your investment before they ever came up with a movement of this sort. So I don't really understand why that's a factor considered on par with that more subjective social world.
Right. So I get environmentalism and I get, the social goals, but what does governance mean? What's that part mean?
It mostly means what you think it means. Like, do they have any, say, regulatory problems? Has there been a lot of turnover on their board? Basically the things that you would expect to look for in a company if you were, say, a big investor anyway. And so I think almost putting that next to things as politically fraught as environmental and social factors has really made that movement a little more complicated, and it's really enmeshed traditional investing a little too much with these more ideological turns.
Right. So essentially, it's taking instead of stockholder capitalism, which we've kind of traditionally thought of, you buy 1,400 shares of Coca-Cola and you make 20% on your money, and the main goal for Coca-Cola is to return value to its shareholders and create profit. And now we have stakeholder capitalism, which is profit is important, but we've got all of these other factors that we also must think about as well, like environmental impact, social impact. Why is that a problem?
Because ultimately you're taking the purpose of an investment, you're alienating the purpose of the actual returns, right? So like you said, in that shareholder capitalism world, you are investing to get a return at a risk level that you're comfortable with. When you add in these environmental and social factors, though many in that financial world deny it, you are basically sacrificing return in exchange for these goals. And when these are put into place in retirement plans and mutual funds that maybe people don't even know this is in there, your money may be used in that trade-off in ways that you don't even know. And so it's semi-forcible stakeholder capitalism in some sense, because a lot of people who think they're investing to maximize the returns are not actually doing so.
So in other words, if I'm investing in my 401k or my pension, I'm expecting to get the maximum percentage of return possible. It's not like your grandma's CDs. You know, back in the day, I don't know, you may be a little young, but when I was a kid, you get CDs for your birthday because they got 2% return every year. And if you don't touch these, then by the time you're 85, meanwhile, the bank doesn't exist anymore. And NFIB is no longer around. You know, we all look at our 401k and go, oh, it's down 20%. It's up 20%. And so in other words, you're saying because people look at these as investments and they want maximum return, then when funds are investing in ESG funds, they're not doing their fiduciary duty.
Generally, no. And so I kind of want to maybe add a little caveat there. And you know, if we get into maybe the more political details, this will come up again. But the problem is, in some sense, ESG is not a crazy proposal. The idea that there are occasionally environmental factors that would, in fact, affect your return, that's real. There may be cases where, you know, like I said, environmental practices might lead them into regulatory issues or might, say, damage a necessary resource. I think the issue is more that they have become almost indistinguishable from progressive politicians' view on those very same, which is a very different question and one that does not actually line up with financial return.
Yeah, I'm guessing that the Daily Wire's ESG score is not as good as maybe HuffPo's ESG score, just to use some examples. And that really seems to be the problem with ESG scores and the way that it's playing out. Like, major banks are starting to say you have to have a certain ESG score if you want to get money lent to you. Well, like you mentioned, if you're a progressive company, you have a better ESG score than maybe a conservative-leaning company or a company that doesn't play within the ESG realm. And that's really where the concern starts to come in. And I know, listen, think what you might, Mike and listeners, about Glenn Beck. I read his book, The Great Reset, because I see the term all the time. I didn't know anything about it. He has a whole chapter on ESG scores. Super well researched, tons of documentation. And I was really surprised at how every company and every person, whether they want to admit it or not, has an ESG score or will eventually have an ESG score, and how big banks and major corporations are starting to use this like a credit score. And that seems to be a huge, huge problem because for everybody who's not really progressive, Mike.
Well, so in some sense, I could see where this becomes a slippery slope, right? Like, if they are going to make these types of judgments, oftentimes not terribly well supported, about companies that they choose to invest in, down the line, you could see that causing trouble in other cases. I mean, this doesn't happen as much in the US, but in say Canada. Remember people involved in the truckers protest? They started freezing their bank accounts, right? I think this weird confluence of the state and progressive ideology and the financial sector is worrying. I mean, I can't imagine ESG will ever get to that point in the near future, but that's why taking action now to keep it out of, say, making decisions with state money is very important to avoid that ever happening.
So you're saying Glenn Beck was overly paranoid?
I wouldn't say anything nasty about him, but I've some have suggested that before, and in this case, he might have gotten a little ahead of himself.
Okay, I mean, I want to know what ESG scores are actually being used for, and I get the danger that he was kind of laying out, because he was using the example of the Sports Illustrated swimsuit edition, that no one was allowed to advertise in the Sports Swimsuit Illustrated edition unless they had significantly contributed to pro-women's causes. So, and they used ESG scores basically to score that. So you're saying that those are like extreme examples, and by and large, this is just sort of a minor shift in how investment works, as opposed to, oh my God, every right winger is going to get kicked out of everything.
Yeah, so I think it's ESG has almost been characterized as like that kind of social credit score, but for a corporation, and I think to some extent that's correct. The problem is, we also need to remember that like a lot of this is built around signaling, right? So a lot of those big asset managers that are running your mutual funds, like BlackRock and Vanguard, are advertising these, ESG investment strategies. But when you look at the portfolios, they don't actually look all that different from non-ESG funds. So you also need to remember that the extent to which this is played up is oftentimes not because they really care, but it's because they think they need to appease, progressives more so than they would appease conservatives or libertarians, right? They're more afraid of losing progressive support in the investing world.
And there's plenty of libertarians that agree with, environmentalism and progressive social policy. So, we're not all right winger. I'm a right winger, but not all of our listeners are. But yeah, okay, all right, I get it. So BlackRock is mentioned a lot, and the CEO of BlackRock, I forget his name. What is BlackRock?
Larry Fink.
Larry Fink. Tell me about Larry Fink and BlackRock. Who are they, and why are they so often mentioned as some sort of evil corporation?
Yeah. So Larry Fink, CEO of BlackRock, is pretty publicly opinionated about climate change and supporting climate action. BlackRock is the biggest asset manager in the United States. They, of course, run many mutual funds under their own name. They run the iShares line of ETFs that there's a good chance you've been invested in if you're on an app like Robinhood or have a brokerage account like Charles Schwab. They run major funds that are in retirement accounts all over the country, which is how most Americans invest. So it wouldn't be crazy to say that perhaps a majority of Americans are in some way financially exposed to BlackRock's success. Larry Fink has been, again, very public about the need for climate action, and many people have interpreted his public words with as being related to BlackRock's ESG turn in terms of investing. And because of that, a number of red states have gone out of their way to remove all BlackRock products from any investment plan that they run. So oftentimes for people who worked for state and local governments will get, it can be a pension or a 401k plan that they probably have funds from multiple asset managers in them, but obviously BlackRock would have played a big part, being the biggest asset manager in the US. And these states have said, no, we will not do business with them because we perceive Larry Fink's words as being hostile to say, fossil fuels and all sorts of environmentally fraught sectors that are more common in red states than blue.
So let's talk about those states and kind of explain the economics. So I remember Richard Murdoch was the treasurer of our state here in Indiana and came and spoke to a meeting that I was at and talked about how the treasurer is like the chief investment officer for the state of Indiana and their pension funds, and they take money and invest those into different companies and funds. And he mentioned Vanguard, and Mitch Daniels had leased off the toll roads, and they'd taken that $700 million and put that into a fund that the treasurer was managing, and they made all this interest on it. And they basically are like chief investment officers across the nation and state treasurers. But some states, South Carolina pulled $200 million out of its funds run by BlackRock. Louisiana announced a $794 million divestment from the firm. And the Louisiana treasurer, John M. Schroeder, according to your article, said, simply put, we cannot be party to crippling of our own economy. What does he mean by that?
Basically, he means that if we take Larry Fink's words to their logical conclusion, that would require a divestment from fossil fuel production, which many southern states, most famously Texas, actually, are involved in. So I actually think he's basically right in the sense of if you were to take Larry Fink's words to their logical conclusion over the years, that would in fact suggest that he doesn't want us to be using fossil fuels anymore. I think the reality is a little more complicated because BlackRock has actually invested in a ton of fossil fuel companies. They've spent about right. They've invested about $100 billion in the Texas energy sector, which is mostly oil. And oftentimes, I mean, I'm okay with them doing so. I think, I totally believe in cleaner energy sources, but the answer is going to be purely incremental and never, some grand off switch for fossil fuels. And so, their words didn't really line up with their actions. And so, unfortunately, taking that action against BlackRock isn't really going to change much because when you really dug into their investments, they weren't boycotting fossil fuels necessarily in the first place.
Yeah, and in your article, BlackRock invested over $100 billion in the energy sector in Texas alone. And Texas, the business, I can't speak today. So 19 right-leaning states have signed on to a letter. Can you talk about the letter to BlackRock and what this is intended to do?
Yeah, so their letter alleged, among other things, that BlackRock was engaged in anti-competitive practices because, of course, many people with investments in state plans with their funds in them didn't really have a choice whether or not they were invested in them, and alleged that they were engaging in a climate-related fossil fuel boycott. As I mentioned, their portfolios don't actually suggest that they're really boycotting anything. And both the company itself and Larry Fink walked back the idea of any sort of boycott. They didn't totally change their tune on maybe their broader climate agenda, but they really, really, really rebutted this as far as them actively boycotting anything. And then a number of states, after sending that letter, proceeded to remove it from all of their state-run investment plans. The allegations in the letter, as I mentioned, the problem is they're only true if you take their words at face value and don't look at what their investments were doing. The result of that is they essentially divested from their plans and essentially lessened options for their state's residents.
That's right? That's kind of my question here, because I don't know quite what to think of it, because I get like the state. Listen, I'm a libertarian, right? Like, but it sounds like the government is kind of a client, and they're sort of saying we don't want to participate in this marketplace, but they're also limiting the choices of the people that their work. So help me sort through that. Like, from a libertarian perspective, I don't know if you're a libertarian. Maybe you don't call yourself a libertarian, but I am. But you work for fee, so I'm guessing you've got some free market chops, right? So how do we kind of unpack that? Like, who am I on the side of the big government treasurer? Am I on the side of the big government businessman here? Like, help me sort out what to think about it.
Yeah, right. I think it's totally a tough one. I think they would have a point if they really thought they were saving the industry of their state by by getting BlackRock out of their plan. But ultimately, I think they're engaging essentially in
grandstanding,
ESG. Right?
They're political grandstanding, right? They're trying to get on their local talk radio channel to get numbers, right?
Right. They basically just thought, like, what if we just do the exact opposite and we say anyone who, doesn't want to invest in fossil fuels isn't even allowed here. While I don't even necessarily like the entire network of investment plans being tied up with the state in the first place, like, that's just the world we need to accept. But they weren't being very good stewards of their state's employees' money by categorically rejecting that firm for its personal beliefs, even when it wasn't actually being manifested in the way it was investing.
So your article, the title says Republicans should follow Florida's lead on ESG investing. What is Florida doing differently? Because you mentioned in the article they're not part of those 19 signatories. So what's up with Florida? Yeah,
well, Ron DeSantis, one of the most famous culture warriors, did not sign on to this letter, nor did the equivalent. I don't know if Florida has a controller or a treasurer, but whoever it is, they didn't sign on. Instead, what he did was he went into their pension plan and he put into their governing documents paragraphs declaring that they would only consider what he called a pecuniary factor. That is, like, a factor relevant to risk or return. He declared that no non-pecuniary factors would ever be considered, including those of political or social considerations. And so DeSantis has very much decried ESG in public. I think he has, kind of used it as a catch-all term for all of this, the possible ideological investing schemas.
The woke corporations that he's fighting.
Yeah,
right. Yeah,
exactly. But what's interesting about his plan is that it doesn't specifically exclude any, sub-advisory from asset managers that are involved with ESG, as long as that, they follow Florida's rules. And it doesn't preclude them from considering, like, environmental factors where they actually do make sense, right? If someone's dumping waste into Florida, the Gulf of Mexico, well, actually, I think that probably is an important risk factor that should be considered. And technically speaking, the Florida pension plan could still consider that.
All right, I'm going to stop you there because I don't even know what the word pecuniary means. Can you please explain that concept to me?
Yeah, factors that would affect the risk or return of the investment.
All right, so in other words, he is saying shareholder capitalism or die, basically.
Yeah.
Okay. And
gotta love it.
And so he's saying we're not going to kick BlackRock out of the state because BlackRock may have valuable assets that we want to invest in, but we're going to prioritize and only invest in the shareholder capitalism stuff and not the stakeholder capitalism stuff.
That's right.
Okay. That seems to me to be a little more logical. It's still a little grandstandy. I guess what I'm frustrated by, Mike, and it's not your fault, it just feels like everybody's just full of crap. Am I wrong in that everybody's just sort of doing the same thing that they've always done and will continue to do? They're just trying to position themselves as opposed to make a difference for their side.
Yeah, I mean, it's hard to argue with that. I would say, if there's something I can say positively about the DeSantis decision is that grandstanding or not, he clearly did his homework, which I don't think those state attorneys generals or treasurers and people who made those types of statements, I don't really think they did their homework. So whether or not DeSantis's heart is in the right place or he's just grandstanding is kind of beside the point because he's clearly made the calculation that getting this right will help him.
I think part of it now is like, all right, we know you're all full of it, but we just want someone who's remotely competent. I think that's part of why he's getting, some of the Mitch Daniels, Mitt Romney crowd to go, all right, maybe I'm all in on DeSantis because at least he can govern as opposed to whatever this all has been. So, all right, so ESG scores, something to keep an eye on, not necessarily the George Soros, Larry Fink infiltration of all of the world, correct?
Correct.
Okay.
I think, again, a vigilant populace will prevent that from ever happening, right?
And in some respects, these states are probably doing the right thing because, you correct me if I'm wrong, but they manage a lot of money, right? They hold a lot of sway in these industries.
That's right. And so, while at least bringing attention to the political question, I think they're basically in the right. Their solution, not so much, but they're certainly right to complain about it, especially when they're in charge of stewarding investments for lots and lots of people.
All right, what else am I missing? What else should we add on this topic that maybe I don't know to ask you?
Yeah, well, I mean, so there's all sorts of ESG funds. I mean, again, a lot of this is just a marketing ploy and it will barely even affect what you're invested in. But like, this is maybe just a good time for, if you're invested in your IRA, like taking a little look at what you're actually invested in. And if you see ESG, look into what that actually means to the company you're invested in, right? Like you might own BlackRock funds, you might own Vanguard funds, you might own all sorts of smaller asset management companies that you might not have heard of other than the fact that it's in your IRA or 401k, right? So I think here it's just like staying just slightly aware of the issue and understanding what that really means to the companies who are claiming to follow some sort of ESG process is kind of the best way to make sure that your money isn't going towards something you don't support.
Mike, you're so for woke corporations. I can't take it, man. Where are you going to start fighting the woke, man? All right. Shameless self-promotion. I'm just being sarcastic for the libertarians out there listening, by the way. Mike, shameless self-promotion time. Tell us where we can follow your work and learn more about this subject.
Yeah. So, as far as ESG is concerned, a lot of places have written about it. The Wall Street Journal has done a ton of work on it. Vivek Ramaswamy, did I get that?
Dude, don't even ask me. I'm the worst at pronouncing.
Right. Well, they've done a lot of good reporting on kind of the financial world. You can look up the journal's various writing about it. They've taken a bit of an ESG skeptical stance that we really, really needed. Foundation for Economic Education, fee.org, where I work, a number of our, on-staff people and guest writers have written about ESG for us. And as far as my work, you can follow me on Twitter at @MF_Viola. And you can sometimes see scripts I wrote for Fee's short videos on the Foundation for Economic Education YouTube channel.
What do you do there?
So my primary role there is as sort of the head of analytics. So figuring out how many young people we're reaching, how we can reach more of them, what about our content really appeals to them, and just making sure we really get that liberty message out in front of as many young eyes as possible. As you may know, Fee has both a big online reach with short and long form written content, videos, social presence, and we also do in classroom programs for high school and college students. So like we are really all about getting economic education into, young people's heads. So these types of conversations are a lot easier to have And, we have maybe a more libertarian-friendly generation coming up.
Yeah, well, I definitely recommend everybody go check out fee.org. I love the organization, have for a long time, and you guys do great work, and you have great branding, too. I love the look of it. It's just very pretty, and it's only gotten prettier over the last decade. So, excellent work, Mike. Thank you so much for being my guest.
Thanks a lot, Chris. Really enjoyed it.
Thanks so much for joining me here on the Chris Spangle Show. We really appreciate it. And as always, if you got something out of this, if you learned something, then please share it with your friends. That is the best way that you can help the content creators that you love. Mike understands that. He's nodding along. He knows. So please hit that share button and tell people, hey, listen to the show. All right, thanks so much. We will see you again soon, and thanks.